Is it time to sell soybeans? Lower yields for corn? Is the US dollar too strong considering the emergent markets? That everything about this we are going to discuss with Mike Zuzolo, President of Global Commodity Analytics in our All About Commodities segment. Connected Farmer is your channel to keep you up to date with the latest trends in agriculture and livestock. Stay tuned and don't forget to subscribe. Mike, I will start with soybeans. I like soybeans because I was born in South America, so I think South Americans love soybeans, or they should, because soybeans bring a lot of money for our exports. But do you think it's time to sell soybeans there in the United States? How are you today?
I'm doing well, thank you, and thanks for asking the hardest question first, Luis. I appreciate that. I am truly at a point where I feel like the market is fairly well balanced right now in terms of sitting right around $10 in the futures market, and with off the combine cash bean prices anywhere from 950 to 970 around the country from producers that I've spoken with as we get into full swing of harvest here. I think we're pretty well balanced, Louise. I think there's a couple big things coming here, not to mention the end of the month, but we also have the end of the quarter, and we also have the grain stocks report, and we also have a hogs and pigs report and a cattle on feed report. And so we have a lot of fundamental news coming after us right now at this stage in the next week. So I don't normally do this, but I sincerely feel as though that the listener might be better served in getting a trial subscription or a short-term subscription to my analysis during this time period, because I think the volatility heading into the election is going to be so unprecedented. And I'm fearful of that we could have market swings that go well below prices that I think they should, or market swings that go well above prices that I think they should. So I think we're going to have to really play it very close to the vest, as we say, and stay on top of our management of our bushels, and elevate your marketing plan. That's what the key is to me in terms of increasing your profit per acre. I know you're busy in the northern hemisphere. I know you're busy in the southern hemisphere, one planting and one harvesting, but you're talking about some pretty large dollars per acre and per hectare at this point with these price swings that we may have. So I would advise, clients or potential subscribers, potential clients, to go to the website, globalcomresearch.com or globalanalytics.biz, and sign up for a trial and keep track. So I think we're fairly well balanced. I think one of the big things that we've seen here the last couple days, and we kind of have to do a rewind at this point, Luis, because we've seen a Brazilian currency that has hit a new 5 or 6 week high and against the US dollar, but now is trading at a new 2-week low against the dollar just in the matter of the past couple weeks. We've got a Russian ruble that is trading at a 22-month low against the US dollar. And we've got a US dollar index that has been able to go up to, it's been able to go down to a 29-month low versus now a 2-month high. And that just happening since this week. The currencies are very much in play. The dollar has hit a key resistance level at around the 94.60 area in the index. That's the number I'm watching. That's a key trend line. Used to be support. It's now resistance on a monthly chart. If we stay below that, I will be surprised heading into the election, given the safe haven flow that usually happens around some high volatility and black swan type market potential fundamental issues like an election, especially with the narrowing of the gap between the two presidential candidates. So if the dollar has indeed made a near-term high and it goes back down, and the Brazilian real starts to go back up and the Russian ruble starts to go back up, we can regain that inflationary bias. And we're going to watch the gold, and we're going to watch the dollar, and we're going to watch crude oil for that.
Yeah, since you mentioned the volatility, it's very important to highlight that the emerging market currencies are really weak right now, contrary to what we have read on credible news sources from the U.S. like Bloomberg. Uh, if you compare to emerging market currencies, the U.S. Dollar is pretty strong right now, and that affects a lot the U.S. farmer because the Brazilian real is weak right now, and the Argentine peso is even weaker because of some domestic issues that are really serious right now.
Yeah, I think this is a really big point, and I think this is where the farmer and rancher needs to really try and get a hold of and understand what's happening, because those BRIC economies you're talking about, the Brazil, Russia, India, China, all of them have their own domestic issues that are keeping them weak. India, it's COVID. India is seeing a terrible situation with COVID right now. And so Modi is fighting that. And so the Indian rupee is very weak against some of these big currencies. The Chinese, however, want a stronger yuan. They want a stronger domestic currency because they are seeing the diversion of decoupling between the United States and China. So they want to rely upon more domestic consumption in case the next 5 or 10 years, they can't rely upon exports as much because of decoupling and what's taking place right now. And so if the Chinese want a stronger currency and the world market goes with the Chinese, well, then you could see China lift the rest of the BRICS, in my opinion, and lift some of these other currencies like the Brazilian currency, like the Indian currency, like the Russian currency, and the satellite countries around these major currencies as well. To me, that's probably one of the biggest things that's changed in the last 25 years is that there are 4 or 5 countries that really drive major currency moves in the emerging markets, and they're still so important against the US dollar and against the sentiment of what's going on between just 2 currencies like the euro currency and the US dollar. That kind of mindset is no longer as useful when it comes to pricing your grain or livestock commodities. And so going into the US election, whoever wins may create a whole different change of currency. And if the Chinese currency starts to go up and the Brazilian currency starts to go up, India and Russia follow, all of a sudden you're looking at a positive commodity market again in terms of inflationary and the U.S. selling power going up because our goods are getting cheaper. And so that's where I want to be we've talked about this a lot. I want to be very respectful of the downside in soybeans because I do think we're rationing demand, but we still don't know supply yet. I'm getting indications that the supplies here in the United States are going to be big. What I'm hearing and getting more and more yield reports now that we've been going a good solid week is that the corn yields are not good where it's been dry, but I can't say that as much for the soybean yields. They are outperforming even in very dry areas like Iowa and parts of Indiana. I had a client tell me just before we went on the air in Indiana that he has not dropped below 80 bushels an acre on his bean yields yet at this stage, and he's been going about a week now. So I think the market's sensing that the yield could go down again from USDA, but I don't know if that's going to happen now. So I think the market's very well balanced, and if we don't get a yield decline, will China really take on that much more demand that they've already taken on? So this is where these currency plays could make or break us with the fundamentals balanced.
Yes, I would add that in South America, the planting progress is expected to delay in Mato Grosso, and the wheat harvest is having serious problems in Argentina. Will have because the Cordoba province is having a serious drought right now, including with a lot of fires there and flames that are spreading throughout the north of Argentina.
Yeah, I've been told by some of the news outlets that I subscribe to that Cordoba is looking at about the worst drought in 40 years at this point. So they're very much like our West Coast. And I think this is very appropriate that you bring this up because I still think wheat is our leader at this stage, Luis, between the drought and between the currencies. We just got a brand new drought monitor here in the United States as we go to air today on ConnectedFarmer. And we're looking at a drought level in Colorado of almost 90%. And that's severe to extreme drought. For the state of Kansas, it's only about 4%, but in the wheat belt, it's about 20%. For Oklahoma, the state is at about 10% severe to extreme drought, but the wheat belt in Oklahoma is probably more like 30% under drought conditions right now. And then the same with Nebraska. They're only showing about 20% drought in the state, but that's about 60% in the wheat belt itself. And then Texas finally is about 18% in drought. That would probably be more like 60 or 70% of the wheat belt in Texas in drought. So I still think between the currencies and the drouthiness and the supply side of the market, the wheat's our best indicator as to whether this market is going to be able to continue higher and break the pattern of 4 or 5 months or 2 or 3 months of higher values and then 6 or 7 months of lower values, because that's what we've unfortunately had to deal with in our country. Your country, not so much because of the exchange rates.
I have missed to mention on other episodes, in previous episodes of ConnectedFarmer, about the strong wheat exports that we are seeing. And do you attribute that, all of that, just to COVID, or do you attribute to other aspects?
I do think that there are some other supply issues around the world, especially in the Northern Hemisphere. And I think we have to keep in mind also, Luis, that we don't know what China's supply looks like right now. Not only have they had African swine fever that's been negative to the demand side, but they've also increased their poultry production, which is mostly compensated, it looks like, on the feed side of the equation. And then they had the terrible flooding in the southern parts and south central region and provinces that are key wheat and rice producing areas. And then just recently, many of the Asian papers are picking this up now. We've got several issues with typhoons and very heavy flooding and wind damage in Jilin and Heilongjiang provinces in northeastern China, far northeastern China. And those are two of the top 3 provinces for corn and bean production, especially, and some wheat as well. So I think this is where the Northern Hemisphere in 2020, as we look back, that supply issue that we've seen in several countries, and then Argentina and Australia in the Southern Hemisphere, it wasn't all about demand. It was really mostly about supply. And then these other countries that usually don't import a lot had to actually come in and purchase because of their supply problems, not so much demand.
And do you see that China would become more involved in those operations where they resell soybeans and potentially they could resell wheat?
I think it's less likely that they would resell wheat because their imports are not that great yet, but I still think the soy complex is it's very concerning to me that their meal stocks are still up near, and the China's national soy meal stocks right now are still up towards the top of the 5-year and 10-year highs in terms of the range of stocks that they still have, and their crush margins, while they're still good, they're not as good as they were. So I do think that if they can't get the disease issue under wraps, or one of the new things that people are talking about now is a resurgence of COVID in China as they get ready for their Golden Week holiday here in early October, that's going to be probably one of the biggest things I watch in the near term, in the short term, kind of like what we had to witness here in the United States with schools reopening, which fortunately that's gone better than what we thought it would at this stage from what I can pick up. But if China would have a resurgence of COVID like the European Union is right now, then why would the Chinese go back into major holiday buying and buy a bunch of extra pork? So I think that's where I'm still very nervous about the demand side of the equation for pork when it comes to China right now, because of the African swine fever and the supply is not rebuilding fast enough, and that keeps the prices elevated.
And what about the other meat production? what can you say about poultry? Brazil is currently having a hard time to export to Europe due to safety concerns, and that could be an opportunity for the U.S. as well.
Yeah, this is a tough one because I'm really wondering whether these are sanitary and phytosanitary issues or whether it's more protectionism and they don't really need the meat. And I'm not saying that's what's happening, but it makes me wonder because it seems like it's happening more frequently in a time and in a space where you would think that we would want to replenish stocks because of the extra buying that we saw worldwide around the first time that COVID came around. And so that's a really big point that you bring up that has to be really monitored closely by people like me, because if we are seeing a demand slowdown and it's more protectionism, that doesn't bode well for going into the second half of 2021. We may be fine in the first half of 2021, but the second half of 2021 may be a little bit more difficult than I'd like it to be.
And why that usually impacts more poultry or hogs than beef usually?
Yeah, I think this is where the wheat is in grains is very much like the poultry and hogs, and they're the wheat of the livestock industry. Very many countries can produce poultry and pork. Very few countries can really effectively and safely produce and have the land space and the arid areas enough and the wide open areas enough to produce beef and cattle. So I think this is where Australia and the United States and Brazil and Argentina are, maybe Canada would be a fifth country, but those are the countries that really can produce the beef because they've got the right geography for it and the right type of population centers, and then a smaller concentration of population as well. It's a lot harder to grow beef. And this is where the proteins that are not made up of beef and pork and poultry and are plant-based, these alternative meats, this is another issue in 2021 where I see more and more funding, big money funding from hedge funds going to the alternative meat sector. And this is something that may continue and even speed up depending on who wins the election.
Yes, getting back to wheat, I saw a farm bureau number saying that the cash payments from the government are more effective to wheat growers. Do you think that is really positive news for the wheat grower?
You know, I wonder if it's not because the basis or the cash price is so much lower than the futures price typically, Luis, because we've had such a terrible time getting the mercantile exchange price to come together with the cash price when we're in our wheat delivery time period, and we have tried to, change it and almost index it so that it would come closer together. I'm wondering whether it's not because of that mechanism where it actually helps the wheat farmer more than the corn or bean farmer. I haven't looked too much into it other than that.
Your final conclusions?
Well, I think we'll go back to where we started because that's where the most important, I think, money on the table lies, if you will, and that is elevating your risk management plan here and watching the macro side as much as the supply and demand. As what often is the case when we come out of a very low price area and we have a weather market in play, we tend to forget that that weather market is probably accompanied by a friendly currency market. And what we've seen once again here recently is the macro currency markets have kind of shortchanged and cut out and kind of electrically stalled out the supply demand enthusiasm by the trade. Look for that to continue to happen, and we're at some really key crossroads as we head into the United States election.
Thank you, Mike.
Thank you, Luis. Have a nice week.